250. It's 250 ticks above.
All right, and Judd, you wanted to know how to play that or what the implication is?
Well, right, because Judd, wait, let me,
okay.
Judd, let me have the forum here.
Okay, you got
Judd,
it. Hold on, I'm going to pull up the charts side by side. 1 second. Okay, I got him up.
So Judd's going to see the gap, and what's going to be an expiration gap, right? Is this where we're going, Judd?
Yeah, this is where we're going.
Okay. So we're going to see the gap, and the gap, and Judd and I are big believers in the gap because we've been reared and trained by the same human being. That would usually, we would look for expirations and fills because that's what we've learned. And it probably has, what, Judd, what would you say, a 93% probability of filling? And that's across all asset classes, right? Is that what?
Oh, yeah. But it's a question of when. Sometimes we've seen them take 10 weeks.
Right. So, but in this case, and this is what happens with the bond markets, especially now that the central banks have been screwing with them for so long, the coupons are radically different because depending upon, which auction of which bonds are deliverable, although I'm not sure that the bonds are even deliverable, but it does trade off a certain coupon. And so because the coupon may be less, in order to get to that yield, the bond has to be higher in price. Okay? So those can come back and fill, but if everything stayed static, they wouldn't, because it would just sit there because the coupon is priced to get that yield. It's all has to work together. So it's not as, if this was 8 years ago, we'd been all over it. It would be a really nice play. I'm not going to say it's not going to happen, but if we put up the charts and you look at each expirations, you see each one reflects a different coupon.
So it's 160.
Like today,
the Junes are 168.04 and the SEPs are trading 170.44.
Okay, so when you did the March expiration, where did the March? Here, let me put it up. Okay, let me put it up. We can just keep rolling back to the expirations. Okay, so we know there was a March expiration. There it is. There's the gap. And it did come back and fill, but that was for different reasons because we knew that because the market actually yield started going higher. We look at the gap.
You're looking at the 160.40 gap. Is that what we're looking at?
166.23 was the settlement. I'm talking about on March 7th, and then the next day, March 8th, we opened at 164.44. And that was purely because of the coupons. Go ahead. Go back to September of 18. You see the same thing. You don't see this dynamic because, we know what was happening. That was during the stock, and the coupons probably were very close at auction, so you don't get the movement. But that's what you're seeing. And you see it in the Italian, and you see it in the French, the Spanish, I'm sure also. So I'm not saying that it can't fill. It absolutely can. It absolutely can. It's just be aware of that's what the gap is from. And they're already pricing to it because they have to, as they're rolling over to SEP. Okay. But wait, I now have a chart of the German 210 curve, and it's a 10-year chart. And I will tell you that the low over the last 10 years has been 34 basis points. The high has been 235, This is on the 210 German curve, and the average over 10 years has been 128. So we're at 46 now. So I'm just going back to answer that question about the. Okay, if you want, I'll send this to Judd. He can do it, and you can take a good look at it. But it's.
If you send it to me, I can pull it up on the screen.
All right, I was going to send it to you right now. Coming right now. So you can take a look. It's a 10-year chart. So it takes us before the Draghi, whatever it takes. Go back to it. You got Richard Clarita talking.
While Judd's pulling that up, I think it's incredibly important. And then that'll lead into the question I wanted to ask about Germany. But I think I've got to really delve into Simon Potter.
Yes,
that really is weighing on me, especially with the 3-day notice.
Yeah, go pull up the story so you can get the gist of it. It's on, you'll find it. Go Google Simon Potter gone.
Unbelievable.
Yeah, and you know what? And it's amazing that CNBC has not discussed it. Not that I've seen.
No, me either. Me either. Neither have I. Judy Shelton, Rick's interview with Judy Shelton was phenomenal, and I really like.
Phenomenal.
Really, yes, I really love the way she chose her words and answered.
Yep. And you know what? It was so good. It was so good. And she was unlike the other idiots like Stephen Moore. She avoided the politics, and Rick was a gentleman and not trying to walk her into a situation, where, do you think they should cut rate? No, she really discussed what needed to be discussed, which of course is the interest on excess reserves, which is an interesting thing. Is that why Simon Potter left?
Exactly what I'm thinking.
Yep. Me too. I don't know, but what was the causal factor there? Because first of all, as she rightly talks about, the interest on excess reserves is the critical element here. Because if I'm the Fed, I don't have to cut rates. I can cut rates on. I don't have to cut Fed funds. I'll cut the interest on excess reserves dramatically and let that money leak out into the system. Maybe. You want liquidity in the system? I know how to get liquidity in the system. Right now. Interest on excess reserves. Lower it to make it a disincentive for the banks to park the reserves, and they'll start lending hand over fist. Or maybe they won't. But at least we'll find out. And the market, you've got to let the market start to work. And she was brilliant, because that's what she said. She says, I want to let the markets, be the driving force again. But they are so afraid.
They are. I wonder if that would wind up being a hidden form of QE.
It won't be hidden. Trust me.
Well,
trust me. I'm telling you, if they were to do that, I think you would see the stock markets rally quickly. Initially. Now, would they sustain? I don't know. But we'd see. And what would really be interesting is how would it affect LIBOR? How would it affect the Fed funds contract? It would be a whole different thing, because the Fed has, through the use of the interest on excess reserves, has found a way to control the game to its liking, except that maybe it's not to the liking. So this is a serious issue. And again, I'll raise the issue, which not enough people have raised, but I'll credit my daughter, Alexandra, who she woke me up to it, which is this whole idea of the narrow bank, which is being formed by an ex-Fed official. Maybe Simon Potter is going to work at the narrow bank. This is a very important issue. And again, nobody's talking about it, but it's important because these guys want to establish a bank, and they'll take $100 billion, $200 billion, $300 billion in deposits, and they want to be able to put them on deposit at the Fed as overnight excess reserves. And they want to be paid 235 basis points. So they'll pay their depositors 215 basis points and pick up the differential, and your money will be safe because it'll be at the Fed.
And the narrow bank is also a fully fractional reserve bank, isn't it?
They don't want to be. They don't
That's
have
amazing.
to be. They'll just take deposits, and they'll just take your deposits, put them at the Fed, and scrape 20 basis point differential. And you know what? Thank you very much. And then tomorrow we'll do the same thing. And you know what? If I could pick up 20 basis points on a 100 billion, 200 billion, 300 billion, and I don't have to pay. And the greatest thing is I don't have to pay FDIC insurance. I'm parking the money at the Fed every night.
Zero credit risk.
Zero
credit risk. And go ahead, do the math on how much you pick up. I don't even need tellers. I don't need anybody else. I can do it all electronically now. Okay, I'm the Narrows Bank. It's an electronic bank. Just deposit the damn money here, and I put it at the Fed. See, Goldman would love to do it, but they don't want to fall out from the Fed. There's a lot of politics, and the Fed is fighting this. They're in court. The Fed's not, because they know this will call the question. It's actually a brilliant strategy. And again, a lot of people won't talk about it because they don't want to be on the wrong side of the Fed.
Hey, Ira, Pete, quickly. How you doing?
Yep. Thanks.
I wanted to shift back to Europe for a second. Angela sent me over a note from Stratford about Salvini and how he's going rogue on the ECB a little bit and the euro and Brussels. But it occurs to me, like if the guy sketches out cost benefit of shifting his relationship to the euro, shifting his relationship to the EC, to the EU.
Yeah.
That the score is not what people think. I think he's starting to see the cost benefit starting to shift to change the paradigm, and the markets. I don't think the world sees that. What do you think about that idea?
Pete, I forwarded Judd. Did you put out that piece from Ambrose Evan Pritchard last night?
No, but I've got it this morning. I'll put it out in the next thing. And
okay.
Matt saw it.
Pete,
other guys saw it.
Yeah, we talk about it.
Pete, this is a great piece that he wrote, Pritchard. Now, and I'm in the camp. Salvini knows, and now that he knows his position. He had a position of strength before, but as Pritchard talks about, his position is now much stronger because he really ran strong in the elections last week, and he did it without 5-star. So he's strong in his own regard. So he knows that that he's in control here. They're threatening him with a $4 billion fine. He's going, I dare you. That's what
he won't
going.
pay it.
There's no chance in the world. They'll try to save face. See, but this is the problem because the media is in totally, for the most part, the mainstream media in Europe, and then of course it spills over here, is in the camp of Brussels. Well, you're in violation. So is France. Everybody's in fucking violation, except Germany at this point. But if you go back 15, 16, 17 years, Germany was in major violation, but of course they bent the rules. So now how do you say to a guy like Salvini, well, we're going to hold you there? And he looks, he goes, wait a minute. Everybody else has been, why are you only holding us? And we're in better shape than France, which is true. And that's why, my favorite play, if I was putting on a 3-year play, I would be long German bonds and short the bunds. I'm short the oats, the French oats, because France is riding here. That spread is 40 between German Bunds and French Oats is 40 basis points, which is it's toward the wide side over the last year, let's say. So, but the French are in real good shape on a relative basis, and Salvini is actually doing them a favor. But Macron is so arrogant and so wants to be the quote unquote savior of Europe that he can't adapt to it. He just can't adapt to it. And Salvini's really doing them all a favor. And there's a lot of other leaders in Europe who agree with Salvini, but nobody's wanted to buck, of course, the French-German, as they call it, the condominium. But it's coming, and Salvini's going, I dare you. He's going to go ahead. You want to break us? You want to break us? I'm telling you, he knows that he could throw the world into a major depression. Trust me, he knows that. And he knows it because the guy who I can't prove it, but there's, to me, no doubt that Yanis Varoufakis, who was in the Greek government as a finance minister for a short time and is a really bright guy and has been on the warpath against Brussels, there's no question that he's advising him. No question. Because he's laying all the cards for him, even though Salvini knows what he's got. And that's one of the things that I talk about that's going on in the world, and they're sleeping. They're sleeping. This is huge, because if the European banking system were to implode or explode, depending upon which route Salvini takes here, the impact would be massive. Forget about the trade issue with China. This would be far bigger, because the ripples from it would manifest out. And I know people say, oh, you know what? I still haven't had anybody, when I challenge them to come forward, let's discuss this and debate it. Nobody comes forward because they know, because anybody who's involved in this knows. And that's why that Ambrose Evans Pritchard's piece last night, I mean, he's been on the warpath too.
Does he talk really a good piece. Talk about the euro versus Italy and Italy's debt?
So yep.
Oh, okay.
The whole thing.
I just pulled up a Bund oat chart on the weekly continuation. Yep. So you got no RH week working with a huge gaps, huge rollover gaps.
Yeah, but see, the problem with it is, from a trading perspective, is that the ECB is still coming in all the time.
Right.
And we don't get to see what they're doing. So when the Italian futures, move one way or another, it's because the ECB's in. It does, they have so much firepower, and they can direct it at any place that they want, because Draghi told you that. He said the capital key only matters over a period of time, but on a day-to-day basis, we don't have to pay attention to it. He's openly admitted that. So that's the one, and this is for PACs, you have to be as patient as you can be. Let it come to you. Same with the German French, because they can come in and intervene to hold the French, and you can go look at the charts and see that there are patterns of days where you go, huh? And again, then you got to watch it off the DAX. It's what I do here. So, I have the DAX up, and I'm watching with the stocks, because if the European stocks, and especially the Euro stocks 50, which I also watch and trade, if those are strong, you'll see certain days where the French and Italian will certainly outperform the Bund, because and it's all correlated, because the European Central Bank is in. And again, they've got massive firepower. And anybody who tells you that this is a level playing field, there's no way, no how, because the European Central Bank has, as some people would say, a large bazooka.
So, Ira, does that mean that if Italy left the euro, does that mean that the BISIS reserve requirement rules go out the window, or the lack of reserving against the sovereign debt go out the window?
No, because that's a Basel holding, which all that says is that it's just a way to evaluate banks, and that because when you hold sovereign debt, They view it as a zero risk weighting. In fact, when you read the Ambrose Evans Pritchard piece, I think he made a mistake there when he talks about the Italian banks, because he said they'll have to increase the reserves, and no, they don't. If you own sovereign debt, you only have to increase your reserves against non-sovereign type debt. So if you own corporate bonds, yes, if they go down in value, you have to raise more capital. But if Italian bonds go down in value based on the Basel regs, you don't have to raise more capital.
Okay.
And the Banco Italia.
Oh my Lord!
It's gone straight up.
That hit me like a ton of bricks right in the face.
It's gone straight up.
Wouldn't expect to see that.
No.
What's
Quickly
that?
at my
ITUB, Banco Ital Holdings.
Wait, hold on. What is it?
ITUB.
ITUB. Oh, yeah.
ITUB short soon.
ITUB?
Yeah.
It's actually one of the better performing European banks, by the way. Go ahead, put up Deutsche Bank.
Oh yeah, that's pretty.
Oh yeah? Yeah, it's lovely, isn't it?
Yeah, and remember when that thing was just up at 16 or something? I thought everybody was out of their minds.
Yeah. It was, you know what, I bought it up at 27.5 against the 200-day moving average when it was there. It went up to 29, and once it went back to, it was the best 20-cent loser I've ever had in my life. I said, okay, you know, I know where I'm buying, I know where I'm wrong. And what I laughed about was that Kramer was touting all the European financials. Oh, you got to own Bank Santander. Put up Bank Santander was his favorite. Let's see what that looks like. I haven't looked at that in a while. What is that? SAN, I think. I haven't looked at it.
Yeah, they got a couple of them. Yeah, that's another one.
Yeah, and this was the best of the best. Go ahead, put up a weekly. Really take a good look at it.
Yeah. Oh yeah, got the weekly up.
And this is the best of the best. And then let's see what Unicredit looks like. Actually, the Italian banks do look better than the others.
What's Unicredit? UNI?
I don't know. I thought it was UNI, but it's not.
That's not that. I have to look at mine.
Yeah.
Let me look.
Even the Swiss banks, and I love UBS. Because of Axel Weber as the chairman, but it looks like shit. You want to go ahead and look at Barclays? Oh, look, the European financials are terrible. The ECB has crushed them. Same with the Japanese. The Japanese banks are the worst stocks in the world, and I know because I own 2 of them for 15 years.
I'm trying to look at those. Well,
what does that say about the systemic? Well, you know, what's that say about the European risk, about the bank failure with the European risk? If Salvini comes out and it's scary. It's scary.
Well, so then I would put the question to you: if you're Jean-Claude Juncker, would you be going to war with Salvini? What world are you living in?
Oh. If I'm Juncker, I'm hiding and drinking a big, gigantic mug of German beer someplace and keeping my trap shut, or Swiss beer.
But you know, it's an existential choice for him. I mean, he has to maybe. He can lay low, but basically he's at war with him.
He's at war with him, but you know, Juncker's on his way out too, as is Draghi. It's just not a place to make a stand. And all these people who come out and make these comments, oh, you know, this guy and that guy, oh, the Italians. If I'm Salvini, I'm at whatchamacallit, Berlusconi's Bunga Bunga parties going, not anymore, not anymore. You know what? This ain't happening. You know, they were able to kill Berlusconi because Berlusconi was kind of like Trump. That he wasn't wrong on a lot of things he said. It's just that he was such a buffoon that it didn't come out right, and he was easy to dislike. And they actually, you know, most people don't realize that Brussels got rid of Berlusconi. They forced him out, and then they literally parachuted Mario Monti in, who was a disaster and couldn't win an election anyway. So, they moved him out.
Juncker got him out,
This
didn't he?
Juncker did get him out. And, well, it was a consortium. And that was with Draghi, and Draghi being Italian was tied into the Italian establishment. And they used, what's his name, who was the Italian president, to do the dirty work. It was really not well done. But Berlusconi, they had so much on him legally that I think Berlusconi said, they told him, hey, go enjoy your money, get out of here, because Berlusconi was calling the question. And he was basically doing what Salvini is doing now, but, in a much more obnoxious way because he could. Because he could. You have 10 billion, 12 billion, you can basically do whatever you want. Yeah. And he was doing it, but he had to go. But Salvini's a different character, and Salvini's been very patient, and his popularity is only growing. And where he really couldn't come to a lot of agreements with Five Star, because Five Star is a much more left-oriented group. The only problem is, it's not a problem. What brought him to power is that hold on one second, I have to answer this. He's building his power base because he's standing up to Brussels and he's making it in Italian terms, going, hey, we still have 9% unemployment. We've got 50% unemployment, youth unemployment. We don't give a shit what you have to say. And that's the difference. And that's the difference. And you know what? The Italian people, when they hear, they go, wait a minute, there's two sets of rules here. There's those for the Germans and the French, and those they like. And then there's rules for everybody else. There's a famous quote that Bernard Connolly used to, I don't know who said it, but it was from somebody in Europe who made the comment, and they go, laws, for our enemies we enforce it, and our friends we interpret it. And you know what? That's the operative methodology of Europe. And if people say, oh, you're down on Europe, I just see Europe for what it is. And that's why Pritchard's column last night was so, because he's been on this. I always accuse Bernard of really being Ambrose Evans Pritchard. He just laughs. I said, there's no way. But it gets interesting. And Europe is now going to become a real problem. And all they're going to talk about is who's going to head the ECB. Well, I stand by what I was on with Santelli. It better be Wiedmann. And in the piece that I recorded yesterday that you have, which I'll put out on a blog, full-blown blog with Anthony's interview too, because that was worth hearing. But this is important, and who runs the ECB is important. And I don't care what the French say. Don't listen to them. They're making a lot of noise because Macron really believes that he's Charles de Gaulle. And I don't know that I'd ever want to be Charles de Gaulle anyway, but.
All right. Well,
Ira, is it true that you can't have a German at the head of both the EU and the ECB?
Is it true? It appears to be an accepted customary practice that no nation could have that much power. But I'm going to tell you what, and that's where Merkel is out of her mind. If it's my money protecting the entire thing, why not? Why not? What have you shown me? Okay, I can, but it's much more important. It's much more important for the Germans at this stage to run the ECB because we are coming to crunch time.
Yeah, I see your point.
I love to get into these. I don't love to. It kind of gets boring. But when I bother to respond to an FT article, and all the European, and they all think that they're smarter than everybody. Again, I'll throw down that hat. Who wants it? You know what? Judd, set it up. Bring in anybody who says, "Oh, you're out of your mind. You don't know what you're talking." Okay, show me what you got. Show me what you got. Tell me about what you know about Europe. Santelli and I camera always get into it. I go, Rick, I'm not accepting it. I said, I read a lot. I've paid attention. As you'll see on that piece I did yesterday with Daniel LeCallier, it's worth discussing, and it has to be discussed because exactly the point of reference is the Italian banks and what the problems in the Italian banks could bring forth to the entire global financial system. And it's substantial. It's substantial. You're talking huge money. And again, when crises come, they all come from the debt situation. Doesn't change. The world doesn't change. So the world for the last 1,000 years, 2,000 years, it'll always come down to that. And that's Salvini knows what he's got. And they have to be careful because if they allow him a victory here, his power is going to surge and he's going to call new elections. And then he's going to have enormous power. And that they've really fallen kind of into a trap with him.
Ira, do you like Daniel LeCallier's work? Because I've been following it for a while.
Oh, have you? You're far advanced than me. I really didn't know his work.
Yeah, he does an
I'm glad you
excellent
say
job.
that. Yeah.
No, he's on the same side of the table or fence as we are. You and the rest of us.
When you hear this, you'll be. I had no idea. He didn't know who I was, but I know. Sometimes when I sit with Europeans, they kind of look at me and they've said to me, holy cow, how do you know all this stuff? Because they're so used to people on this side of the pond really not being well informed.
Yeah, they love the ugly American stereotype.
Yeah, they do. And I tell you what, I've just read too much, for 40 years already. This is not new for me. But I'll tell you something that you should watch, and it really pissed me off, is Adam Posen. You know who he is?
I'm not recognizing the name.
Adam Posen was on the bank. He was on the governing board of the Bank of England. He's a bright guy. But last week, I don't have the link, but you can go find it. Last week, he spoke in Europe at, it was a conference, for that fucking Peter Prayat, who's the chief economist for the ECB, who I can't stand because I just can't stand him. But Posen speaks for 11 minutes and 25 seconds. It's a video. Watch this. Watch it because it's unbelievable. I'm just going to tell you my thoughts, and you can agree or disagree after you watch it. The arrogance that is involved in this discussion was unnerving to me, truly unnerving. And Adam Posen now has a huge position at the Peterson Institute in Washington. He may be their chief. He may head it. He's a big name. But you should watch that. It's 11 minutes. But it will reveal to you so much of the thought process of this group.
Ira, your inner trader's coming out today. Shit,
it
fuck,
is coming
puke.
Oh, I'm sorry. I'm sorry. Yeah.
Oh, no. We talk like that all day long, so feel free.
No, it's all right. But I watched the Posen piece. Yes, I rewatched it last night to take notes because it's to me unbelievable. And this is the mindset. And it's a battle. And again, who elected these people? And basically Posen tells the bankers at the ECB, seize control of all this because, and I'm quoting him, I'm not paraphrasing, you are guaranteed by an international treaty, unlike any other central bank, which is a domestic institution, because of the setup of the ECB of 28 or 27 separate nation states. See, it's interesting. Europe wants to be a nation. They want to be nation states when it fits their purposes, but they want to be a supranational power when it fits their purposes. So they get it all. And that's what Posen's speaking to. You know what? Wow. It's the arrogance that he approached it. So basically seize all this power to do all these things, even though nobody's ever elected you to a damn thing. And there's really no oversight. And that's what Draghi has done, because Draghi did it with the protection of Angela Merkel. Everything he's done. And you know what? And I don't think what he's done is such a great thing. So again, that's my opinion, because I think he's created a monster here, just like was created here at the U.S. Fed. It's a monster. And the Japanese, they don't know how to, nobody knows how to extricate themselves.
I'm beginning to think that the central banks, or specifically the U.S., lowering rates, Ira, like even if it's a quarter point, if we can't get turbocharged at 2.25, what the hell's going to happen at 2, let's say, or anywhere else on the planet for that matter? And so, you know, the next time there's a dovish pivot, I kind of get the feeling that the markets are going to freak out.
Well, that's what, you know what, that's what Kramer's kind of saying yesterday. You know, he said, I can't believe I'm saying this, but I think that they should raise rates. Of course, he walked it back and clarified it. But because the lower rates go, that the world it's showing that the world is just nervous. So he'd rather see a rate rise to say, oh, see, everything's okay. What a position to put yourself in. That's a really, 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 really bad position. First of all, you shouldn't be listening to the stock markets anyway. Bond markets, yes. Stock markets go up, stock markets go down, except in the world that we live in with passive investing. It's just all one big ball of correlation, which is okay. It's the world we have to deal with, and the way we have to react. It's just all correlative. But for Kramer to be saying that, raise rates so that the all clear signal's given, huh? Then today, of course, he was saying cut them, and what you should do is just be shrinking the balance sheet. Well, I actually agree. Again, and I'll say it again. If I ran the Fed, I would take, well, the interest on excess reserves down to about 1.5% from its present 235. So I'd cut 85 basis points and say, I'm going to keep shrinking the balance sheet rather than backing off, because now the Fed, you know, now they've cut their shrinkage, and then by the end of September, they're ending it totally. I think the Fed's going to make an announcement that they're going to end the quantitative tightening totally very soon, very soon. And that may also give us an answer to why all of a sudden Simon Potter is gone.
So if they, and that brings me back to interest on excess reserves.
Yes.
The hidden quantitative easing, which isn't so hidden, it's just not called
right.
quantitative. So you know, yen tightening. That's as Angelo had called you know, that's a double dovish. That's a downgrade of the U.S. economy, frankly, which is just another.
But Ira, here's what I don't get.
Yes.
With what you're saying.
Only one
Yeah.
thing? I don't. There's a million things I'm not getting, but that's okay.
All right.
Yeah.
So we lower the interest on excess reserves. Fine.
Yep.
Who the hell are the banks going to lend to? If we're already awash in debt.
That's a great question. But if money is flowing around in a fractional banking system, and the economy is as good as I have to sit and listen to it, everybody tells me, well, GDP was 3.1. Not a problem.
Yeah, give me the right deflator first.
Okay. Well, when money's running around, it'll find a place. Believe me, at low interest rates, accordingly. So what are you afraid of, right? I agree with you. And even the Europeans complained. Draghi complained about the interest on excess reserves going, the United States, the central bank of the United States paid out $49 billion in interest on excess reserves last year, while the European Central Bank collected $7 billion. That's a $56 billion differential. Well, if things are so friggin' good, What are you paying the banks for? End it.
Yeah,
But first, let me get long gold.
Yeah.
Sorry. Sorry.
I think gold's like one of the cheapest assets around at this point.
No, but if you set that into motion, that would be a kick to the gold, because all these brilliant people who work for CNBC who go, when they want to tax and tell you, where's the inflation? Rick, you told us. Well, the wild card was and that's what Judy Shelton spoke to. So it was a brilliant interview. When you started allowing the banks, the Fed, to pay interest on excess reserves, that money stopped flowing, and that's why all the classic monetarists were measuring, the velocity of money and the monetary base to go with it. They were all, even with all that QE, it wasn't developing like everybody theoretically thought, because for the first time the Fed started paying interest on excess reserve as an effort to ensure that the money wasn't running wild through the system. That's why they did it. They wanted the illusion and beyond that the banks were healthy and that there was all this, but they didn't want the money out there. They didn't want the money out there because they were afraid that it would wind up in some type of inflationary spiral. So the
original intent was sterilization.
Yeah, that's right. Exactly. While you were also propping up the banks, because maybe the money wouldn't be circulating, but then the banks would be losing money. Because don't forget, when you take the money, you have to pay FDIC insurance. And if you're not able to lend it, then it becomes a not very good proposition. So they insured themselves, but now the question is, when should it have ended? When should it have ended? And we don't have, it's a very complex, this is not easy. If I'm making it, it's not. It's a very complex situation, but at least own up to it. And the fact is, they've never had an exit strategy. Bernanke's original exit strategy was that all that debt, all the balance sheet would just roll off. So if they bought 10-year, 12-year, 13, 14, 8-year, when it would hit its expiration date, that would be the end of it. But of course, that's not the way it's worked out. And now they talk about having to maintain a much bigger balance sheet because of currency in circulation, whatever, secular stagnation, whatever the rule of the day is, that's what they're speaking to. So,
the goal is to stimulate consumption. Well, how much consumption have we pulled forward at this point? I don't know how to quantify it, but the American consumer's capacity to consume even more, it just boggles my mind.
Well, in a declining population, right?
Yeah, go ahead. Sorry.
I'm sorry, but
no.
Population, we're declining. Our population is declining. So how can our consumption continue to increase?
Well, Europe has a demographic problem, without a doubt.
Yes.
Right, and so does China. China's got a demographic problem.
And Japan's worse.
Yep.
Yeah.
But Japan's rich. Japan is a rich nation. They've saved a ton, right, Ira?
But they've burned through a lot of savings over the years. But they have saved a ton. But the Chinese save money. Everybody will talk about the Chinese debt, but they're still big savers. But the Japanese and the Germans, it's the problem. And the French know that it's a problem because the Germans are savers. They save. The Germans are saving on two levels. They have private savings, and they're actually running budget surpluses. So the government is saving as well. This is what makes it so difficult. And now they're going to try to beat up Germany and tell them to keep spending money. But the politics are such, and this is where Merkel is really screwed up, but a lot of it falls on the shoulders of Draghi and others, because somebody finally woke up. there are certain rules in economics or certain high probability actions. And here's something that, there's a term called Ricardian equivalence, where David Ricardo had theorized that, look, if you know that there's a tax increase coming, I'm not talking about a sales tax like in Japan where you run out and spend more, but if you know taxes are going up, you start saving. And I think it's what's going on in the United States right now, that, one of the fallouts from the Trump SALT tax is that people of middle high income are spending less because they've been being hit with higher taxes, and they know there's more coming. So you start saving in anticipation of it, and that becomes a drag on the economy. It's the same when somebody wrote an article, it was Evans, or somebody wrote an article recently talking about that, unbeknownst to the idiots at the ECB, when you went negative, well, if people aren't earning as much interest on their money, what do? They start saving more. Because they don't have
the retirement trap. That's the monster retirement trap.
Exactly. And it also there's a term for it in economics called what you're talking about when you bring spending forward. It's called intertemporal misallocation. It was the same thing with the car. Misallocation.
Okay.
Right. You can look it up. Intertemporal misallocation. It was the same thing that happened with the cash for clunkers. Remember what happened? Boom. People ran out and bought cars, and then car sales fell off the cliff.
Yeah.
Ira, real quick, I want to circle back. It's not much of a circle, but I want to circle back when you said something about Bernanke, and it ties in with exactly what we're talking about here. Bernanke did not leave himself or anybody. There is no exit strategy. There's no exits. What's the exit strategy to any of it, including, not just the debt bomb. Everywhere you look, as you said, the issues are endless. Meanwhile, we've got Greenspan running around now talking about saving and a sound dollar. Or am I misreading it? Am I misreading what Greenspan's message lately has been these last few years?
Greenspan's scared about the debt situation.
Yes.
He has been, and it's the one thing him and I have agreed about. I think he goes in and out on it, but he's of the same mindset that I am, which is, hey, wake up. You've got 3% growth, and you're running $1 trillion deficit. You got a problem. This is when you're supposed to be shrinking your deficit. But we're growing.
Ira, have you ever read Greenspan's paper from 1966, Gold and Economic Freedom? Gold and Economic Freedom, it's called.
Three times, 4 times.
Yes.
He wrote it. He wrote it for Ayn Rand when he was enthralled with sleeping with Ann. No, sorry. Yeah.
Yeah. Well, to talk about hypocrisy of the highest order.
Yeah. Well, as Keynes says, when the facts change, so do I. What do you do? So I'm going to give him. I attack him on a lot of other grounds. You know what? 1966 was 66, but he was a much better thinker in those days. I think he's had too much time in Washington. That's my opinion. I think it affects you. Your brain goes wobbly. And he married a woman who was too young for him, but whatever. First of all, there is no such person as Alan Greenspan. I'm going to tell you that. He's Woody Allen. Go ahead, put them face to face, side by side. They both play the clarinet very well. I guarantee they're the same person.
That's funny. Am I muted out?
Look at him.
No, you're live, Matt.
Oh my God, that's so funny.
I believe the same person. You do the math. I don't know.
Wow.
All right.
I was just looking at Mexico when we were talking, Ira, when just going through, and that's a big move in Mexico off this last low.
You know what? I honestly bought the peso yesterday morning, It gave me some opportunities. It just won't, again, we get up to this level. I'm looking at the peso. I'm looking at the peso futures, June. So we'll get up to 524 and it'll probably fail. So it just doesn't get, but again, and my view on it is that if you think that the China trade situation is genuine and that it's going to explode more, and you're not buying Mexico, and if you're a CEO not moving assets to Mexico and only into the rest of Eastern Asia, you should be fired immediately, because the Mexicans, NAFTA was set up for the supply lines for U.S. multinational corporations. And if you're not moving to take advantage of this, and yes, I know Mexico is fraught with problems, corruption, the drug lords, but they have a leader, AMLO, who I view, again, he's not yet, it's too early, but he could be a great success because he could really make an impact on corruption. He really can, because he has the real popular support of the people. He won in a landslide, and there's people already poking at him, but Mexico has been so corrupt. If they get this right, they will be in a phenomenal position if they get this right. Because if the China situation really deteriorates, meaning for China, we will return to what NAFTA was really all about in 1994. And I'm not saying that that's a good thing for the American worker. I'm not saying that whatsoever. But it will mean that foreign capital ought to all the capital that left Mexico better be heading there. And that Buffett is not buying Kansas Southern. He better talk to Charlie Munger more, because something's wrong. Because Charlie Munger better see it. Because KSU, because if all that happens, Kansas Southern is a steal. Now I'm still sitting here long. I haven't added to the position because, again, it just doesn't pay you, because the next tweet that comes out that's that's negative or positive, then the peso will get hurt, which is kind of ridiculous, but that's what will happen. So you have to be cautious. But Judd, thanks for bringing it up. I think that's
and I just put up EWWFXI too, and that's starting to break out through momentum as well. And I put up Yuan Peso for everybody to see that. It's the same chart. It's long Mexico, short China.
Okay. All right, I'm going to get off. This is I haven't been here in a few days, about a week, so I just want to see what was going on with you guys. So, as usual, I love being in this room because the conversation gets random. Sorry for my expletives.
We don't care.
Expletives.
We don't care at all.
Just give me a heads up in like 25, 30 minutes so I can be here to the record button.
I was just poking fun, Ira. That's all.
No, I don't need to speak. I just got a text from somebody asking about the S&P bond.
Oh, God.
Oh, yeah.
Hey, we need McLennan in here.
You know what? Stevie's he's on ice for a while. He's unhappy with his trading. But, yeah, you know what? He would do really well because he's such a great thinker.
Kevin, call me. I'll help him with his trading.
Okay, I'm going to tell him that.
Yeah, he doesn't. He trades very different than you, Biggs.
Believe me, I know who he is. I know.
He's great. One of the great thinkers, and he's broken more screens with a golf club than anybody I know.
Yeah, he kept Quotron in business for years.
Oh, breaking that skull! Oh my God, he could break screens like nobody's. I go, stop it, or he laughed.
I'm surprised he's still trading.
He'd walk down the street. You could tell where he was walking because he'd walk down Jackson, he'd walk around the loop and rip the metal phones out of the AT&T phone booths.
What a good man. All right, I'm going to look because I gotta get in the car and drive downtown now. Oh, God. I hate this. All right, I will be back to visit. But you know what? Now, and I've gotten 3 or 4 things on the silver, questions about the silver today from people, which is interesting because the silver, that's one of those correlations. The silver is pegged to the copper more than it is to the gold. But the silver kind of held in this morning, even when, so bears watching. People are starting to wake up, especially with the grains. And Judd, everybody who listens to your chat room, the grain, you turned the grains before they were ready to turn. And now, I think what we see going on is now you better be worried that the Chinese just start buying everything they can. And I'm talking futures contracts because they're going to be taking delivery because they have to insure against a bad U.S. crop. Because, again, no matter how big the South American crop is, you get caught here with a dramatic decline in the U.S. crop. The Chinese, there'll be a lot less rhetoric from the Chinese because they're going to have to be in a position where they're ensuring supply.
Yeah, and you still can't get in the fields.
No, I know. And this isn't really even the rally. This is just, I think, as we've talked about for 3 weeks in this room, 4 weeks, I think a lot of it is still, the funds covering shorts, because they were massive shorts, especially in the corn.
Yeah, and they don't understand how futures work, period.
Well, and they can't turn on the tweets anymore, because they would move, the tweets from the White House, we'll have a deal. They kill the grains. Or they rally the grain, they could, no, the deal's off. Kill the grains, and they were banking on, the deal's falling apart. But they weren't banking on it. And even as they were seeing the weather unfold, the Chinese have to be very leery of getting caught off here. Because even the beans, you see, which were lagging because a lot of people were rotating, which we talked about buying corn and selling beans. But even that's not happening right now because the beans have actually been doing pretty well.
Yeah, and there it is. I got the corn chart up on the weekly. That when we were in the last time talking about it, it was the May expiration.
Yeah, that's right. That's exactly right. You were talking about, be patient, and look what happened. Boom. Boom. We shall see. But again, as we started the conversation, there's a lot going on. There's a lot going on. And Europe is a big story. And I know Mark Grant has talked about the election, but the story is actually bigger now because how are they going to resolve these issues? And now that Salvini ran so strong and Farage, it's interesting though, but I'm thinking that Britain may call that second referendum because the one thing that the election showed, and this is the last thing I'm going to say, the Greens were able to get out the youth vote, which made the elections not as bad as they could have been for a lot of people. And I'm sure that there's people sitting in England going, if we get the youth vote out, we may be able to win a second referendum, even though it would be a mistake of gargantuan proportions anyway. But they may be thinking that. That's what this election may have showed the Brits. Even though Farage beat them all so bad, it was scary. All right.
Thanks, Ira.
Thanks for giving me. We covered a lot of ground today, but listen to that podcast. Who is it? Pax? Are you the one who's been reading Daniel the Kaye?
No, that was Angelo that's been reading the Kaye.
Oh, Angelo?
Yeah,
Okay.
I've been following him for about 2.5 years.
Okay, you will love. I'm telling you, because I just listened to it myself. I said to the guy who was the moderator. I told him after we finished this, I said, you know what, Richard, I've done a lot of these for the Financial Repression Authority. This is the best one I've ever done. And he got back when he sent it to me this morning. He said, I agree. And I've done some really good ones with Bianco and Bookfire and some really good people. But this was, I was very impressed. I told, in fact, I'll let you know because I'm going to open up a dialogue with him. So I'll let you know how that goes, and if I can present anything that that he talks about, and if you guys want to ask questions and I can get responses from him, it'll be really good.
Oh,
okay, great,
beautiful.
Okay, all right.
Thanks again.
Take care.
Thanks, Ira.
Okay, all right. Okay. Bye bye.